This is the briefing for Friday, August 25th. Well, for most of the last trading week, I've talked about the fact that we've had a fractal nature of the markets expressed pretty clearly to us, especially in developing three-step counter trend rotations. I'm not going to go back over all of the issues that I went over for the last week or the last 5 briefings, but it's pretty clear to see this is three-step counter trend rotation, three-step counter trend rotation, and this is where the equality between legs 1 and 3 were right about the 445 area, 446 area in the spiders, and right at 374 in the Qs. You can see we came pretty close to that in the spiders and almost reached it in the Qs. And then of course we got this sell-off and then a little bit of a bounce in today's trading. Now, just because it developed into 3 steps doesn't make it a counter trend rotation. We also have to look at what's happening with the internals. And the internals were basically not strengthening, which suggested that it was counter trend. If this was going to be a new bull trend, we would have seen breadth increasing pretty dramatically, and we would have seen volume increasing as well. And that did not occur during this move here. And you can see even on an hourly chart how low volume was here and how low breadth was during that rally as well. So basically, we finished the day. We're closed above yesterday's low. Had a little bit of volatility in the morning while Chairman Powell was speaking at Jackson Hole, and you can see that right through there. But once that was over, I guess the market decided to start buying going into the close. Really not a whole lot there. 566 shares positive in the NYSE. Only 398 positive in the NASDAQ and only 233 positive in the Russell. So really not a strong rally that we saw in today's trading. What's going to be important is what happens basically in the longer term development, which is the daily chart. Now, upside resistance is 445, and you can see in yesterday's trading, we hit that and then immediately sold off into the low of yesterday. You can see volume was increasing basically as this move to the downside started, and then we had a little bit of an increase in today's trading as well. 52-week highs minus 52-week lows, just continuing to decline. So not seeing any real strength in the market in terms of the spiders. This was very interesting as we approached 445 and then sold off. You can see volume began to tick up, and then we had an increase in volume in today's trading. It's not easy to see here, but you can see there's a buying tail right there and a little bit of a selling tail there. It's a little more clearer in the Qs, and I'll get to that in a minute, but that's basically when you see a buying and selling tail on a daily candle like that, it suggests that neither buyers nor sellers could gain control of the market in today's trading. So the real question facing us is this complete and done, and we're in the process of a new leg to the downside, or is something else in the process of developing here where we got a rotation down, testing lower support in the 430 area, and then we're going to see another rotation back up, potentially to test the 459 to 460 area in the spiders. That's yet to be seen. But the key is going to be 445. If we trade above 445 and close above 445, then that would eliminate the fact that this is a counter trend move and we're going to see something else to the downside. And it would suggest then that we're going to see something else to the upside to test the recent highs that we've just seen. In the Qs, a little bit different. You can see we've got the same buying and selling tails here. Volume increasing yesterday and in today's trading. Breadth really not very strong in today's trading as well. Upside resistance in the Qs is 373, and then above that is going to be this high right at the 388, 389 area in the Qs. Support comes in at 355. That's going to be the low from that's a week ago. That was last Friday's low, so that's going to be very important support in terms of the Qs. And then in terms of the Russell, you can see the Russell really having a lot more price depreciation than the other 2 indices. I guess I misspoke before. I said it was the Qs that would have the buying and selling tail, but it was the Russell. So you can see a buying tail there and a little bit better selling tail there. That suggests that neither buyers nor sellers could gain control. Support in the Russell is at 180 and resistance is at 190. It's going to be very, very important to determine what is going to occur based on that. Now, you can see in the Russell we've got this basically 5 or 6 days of rotation. Breaking the 186 area would then suggest a test of 190. Breaking today's low is going to suggest a test of 180, and breaking that is going to open up the possibility of trading down to 170. Now, yesterday we were approaching oversold territory. You can see right there, and the Nasdaq was oversold, but not extremely so. Because of the positive breadth, even though it wasn't very strong, we're basically neutral in terms of overbought and oversold. So this gives the traders or the market the opportunity to go in either direction come Monday. You can see volume fell off today as we had that rotation back up. Volume fell off in the Nasdaq as well. So really no impulsiveness to today's move, either to the upside or to the downside. Looking at the percentage of stocks above their 50 and 200-day moving average, this is the S&P, and you can see the deterioration that's been occurring. This deterioration going all the way back to July 24th. So basically, it's been about a month of deterioration in the indices. The same thing with the percentage of stocks above their 200-day moving average. And then in terms of the Nasdaq, you can see the same thing is occurring. The percentage of stocks above the 50-day moving average and above the 200-day moving average. And in the Russell, it's basically the same thing. You can see breaking out of this rotational pattern, and then, of course, really at pretty significant lows. Now, looking at these charts, I want to go back to the S&P. You can see that basically we're pretty much at the same level that we were on May 31st in terms of the percentage of stocks above the 50-day moving average. But if you look at where price is on May 31st, you can see it was right there, basically around the 417, 418 area. And today we're trading at the 439, 440 area. So it would suggest that potentially price is hanging on in anticipation of a potential move to the upside. But if that doesn't come, I think we're in for the possibility of another thrust to the downside, and important support levels will be tested and or broken. So basically for Monday, the jury's still out. Are we complete with this counter trend move? Are we going to see the internals strengthening as price moves higher, or are we going to see a move to the downside and lower support levels tested and broken? That is yet to be seen. But whichever way we move, it's going to be very important to see the internals confirming that move. And I really need to stress today that even though we closed higher than we did yesterday, the internals really were not supporting a positive day in today's trading. Next week is also a holiday week. We have a 3-day weekend coming up. A week from Monday is Labor Day in the U.S. So as we get towards the end of the week, volume is going to fall off, and we could see the market jerked around to some degree as a little bit bigger money prop traders can manipulate where the market is going based on lower volume. So we'll just have to determine what's happening in terms of that going forward beginning next week. Have a great weekend, and I'll pick this back up again on Monday. Hopefully we'll have a little bit clearer indication of what's going on. And if you haven't listened to the briefings this week, it's just really important to understand how this develops or how this did develop into multiple time frame 3-step counter trend moves, and how the equality, the calculation of equality between legs 1 and 3 really played out almost exactly. And I think the at one point there was I think it was at 441. Yeah, it was right here where this 3-step move projected right at 441. The spiders hit it almost exactly. So keep that in mind. I think it's a good trade lesson to go back and listen to those, and they might give you some help going forward in the future. Have a great weekend. I'll pick this back up Monday.